The rampant volatility in the commodity markets has many investors wondering, what's next? As mining companies slash jobs and postpone expansion plans, one expert says, for those willing to ride out the economic roller coaster, there's money to be made.
People don't come into the industry, and inevitably it recovers. And not until after it recovers, then the investors come into the market. So they end up coming in at the top of the market. Any investor that has enough wisdom or patience or long-term vision to come into the market at the bottom like this, then the upside is enormous from a situation like it is at present.
Roulston is the publisher of Resource Opportunities, a newsletter highlighting the value and opportunities in the resource sector. The industry expert admits that mining is facing some challenges in this new global economy.
All of the mining companies are facing the same problems that all companies in every sector are facing, which is it's difficult to obtain financing right now. And if it's hard to obtain financing, then naturally they're going to put their development and expansion projects on hold. And the other thing, with the metal prices down where they are, even though I think these companies believe that the prices are going to recover in the longer term, it's hard to get shareholders and other investors to commit to making investments at a time when the commodity prices are at a low level like this.
While some may see the value of resources dwindling in the midst of a worldwide economic downturn, Roulston sees great opportunities.
Once we get over this current financial crisis and the economy gets back on track, we're going to get back to the situation where we were 1 or 2 or 3 years ago, which is a severe shortage of many of the commodities. People are focused on the fact that copper has gone from $4 to $1.50 sort of numbers, but they forget that in 2001 copper was trading at 60 cents and now it's $1.50. Investors should be looking at taking advantage of these tremendous buying opportunities. The companies have been very, very much oversold because of panic selling.
He's seen it happen before.
After 1997, there was a severe crash in commodity prices and in the mining sector in general. Investors that came into the market at the bottom were buying shares for pennies a piece at a time when people were laughing at them for investing in resources. And many of those companies went from pennies to dollars a share, and the returns were outstanding. And we're in the same situation now, where these companies, good, solid companies, with strong management teams, with good assets, in many cases are trading at less than the value of the cash in the bank. So if you buy these companies, you're buying cash at a discount, you're getting, in many cases, a mineral deposit for free.
While demand for resources may be down in North America, a new president in the U.S. is likely to change that.
Obama's pledges for infrastructure spending, that's going to create a big boost for demand for a range of raw materials. And that's going to be part of that process that kicks off, getting the commodities markets back onto an uptrend again. Once the commodity prices start moving up, then the companies are going to be back looking at getting these expansion projects underway.
Along with promising news from the United States, Roulston also sees other emerging markets for commodities.
I think the recovery in the mining sector is going to be even greater than it was a couple of years ago before the financial crisis hit. And I say that because China is still growing, and even with the financial crisis, growth in China has slowed to about 8% a year, which is still an extraordinary level of growth for an economy as large as China's. China's economy is now larger than the UK. It's the 4th largest economy in the world and growing at a pace of 8% a year, and that's after the slowdown. India is still growing at a very strong pace. And so the consumption of commodities is going to continue to grow.